We're live. Welcome back, everybody. Dipcatcher Radio back again. Let's see what's going on. Make sure my camera's looking all right. Like a weird filter, but that is okay. We got 15 viewers in here so far. If you have any questions, ask them in the chat. I'll be taking a look at the chat on both YouTube and Twitter. Today, we are going to be talking about Flexnet. As most of you probably already know, if you already follow me and you've been keeping up with what's going on last couple of days, Flexnet is an L2 powered by HEX and an innovation incubator. It's really the first of its kind. It's a blockchain that uses HEX as its native gas token and as its primary liquidity pair. And the innovation incubator is really what I'm hoping sets Flexnet apart is basically, trying to uplift and support people who are innovating and building the next generation of solutions on chain. That's kind of where I feel like things in our ecosystem have been kind of stagnant for a while. And I think that, one solution to that is radical innovation. We want to unpack what the next big metatrend is in crypto. You've seen these metatrends change from cycle to cycle. It's like 2017, we had the ICOs. 2020, we had the DeFi food token yield farms. 2021, we saw a lot of NFT stuff. 2023 and 4, we saw the meme coin stuff. And I think really what all that is just the market is always looking for new ways to and new formats for high risk speculation. And so I think that really that's where Flexnet can thrive, is really just being kind of like a hub for innovation. Trying to learn from, it's like by now, we've in the HEX ecosystem, we've lived as HEX as its own unique DeFi asset before. We've kind of lived in this dual chain environment with Pulse Chain. We've seen how, Pulse Chain has just played out so far, seen, what worked, seen what didn't work. And now I think that this is really the opportunity to just kind of bring HEX back into the focus, especially HEX on Ethereum. And I'll go into a little bit why. I mean, if you follow me on Twitter, you've heard me harp on for now, it feels like years, about how HEX on Ethereum really is kind of the dark horse, the one that mainly matters. And so building this, blockchain centered around HEX, it's like I'm kind of making my actions align with my words here. So why don't we just go through the website on, we'll go through the website on Flexnet, and then if you have any questions, just pop them in the chat, but we'll just kind of go through the site, and then I'll go into detail on the various topics. I'll try not to go too deep into some of these rabbit holes, but I mean, there's, a lot of ways to, to look at this stuff, and a lot of background insight that's been built up over years on this stuff. So here, why don't I do this? All right, so let me pull this out here, rearrange my screen a little bit. Okay. So this is Flexnet, the Nexus for Onchain Innovation. It's a blockchain powered by HEX and an ecosystem incubator innovating at the intersection of digital finance, AI, and quantum. It's like we've kind of, we've been in this era of digital finance for years now. And over the last 2 years, AI has really kind of, inserted itself there. And probably the next big, thing that's outside of the scope of AI and blockchain that I think has an impact in the space, potentially, is quantum. Has a lot of security and privacy implications. And also, I think that there can be new opportunities unlocked that leverage things, whether they're quantum, like actual quantum computing, or more just dynamics related to quantum, even if it's not truly quantum, maybe in the math involved in quantum, um, that, that there's potentially something massive kind of, at this intersection here. And these are the categories I'm really interested in. And I want to support builders in creating in the space. So that's what Flexnet is. It's an L2 rollup built on Conduit stack, which enables tight integration with the broader Ethereum L2 ecosystem infrastructure and the use of wrapped HEX as the native gas token. This enables Flexnet from day one to have cross-chain bridge, high-performance block explorer, seamless on-ramps, powerful subgraph indexing, and everything else that builders need when inventing the future and speculators need when betting on it. So, most of Ethereum's growth over the last couple of years, for better or for worse, has been around these L2s. So there's actually been a lot of really good infrastructure to support that. And so, and I feel like this is an opportunity to kind of insert HEX back into the conversation amongst the broader Ethereum ecosystem. HEX was the top performing thing in 2021. It kicked off Uniswap, it kicked off DeFi. But HEX has kind of stagnated over the last 2 or 3 years, and so I think that this is actually a good opportunity to kind of re-inject HEX in like a new frame, and hopefully get alignment with some of the broader industry participants. So that's why that's the approach that we're going with. L2s certainly have their risks. There's really no way to get cheap, fast fees without some type of risk succession. Like Pulse Chain, the fees are cheap and fast, but kind of the downside is that it's like in its own isolated world. Like it's only cheap because no one's really using it. And the risks involved are mainly related to the supply centralization of PLS and the admin keys on the bridge. So, those are risks that, the people generally tolerate, and then the market just prices in those risks into the value of all the assets on the chain. And that's kind of what happens. The market just prices risks. And so using an L2, the risks are generally related to the sequencer, and then the, keys are related to the bridge. And that's kind of, similar scope of risk profile in there, but leaning into some of this kind of standard infrastructure, it actually can resolve a lot of those risks. So, that's kind of the nature of that risk reward trade-off that everyone who participates in the space is making all the time. So why Flexnet? So first, this is really big. And this is really important to me. The culture of innovation. The mission of Flexnet is to help you invent or invest in the breakthrough metatrends of the future. And this is achieved through a professional incubation team who serves the Flexnet builder ecosystem. Like, this is really important. I really, and this is probably, like I freely voice my, kind of frustrations, because like when I get on Twitter, like I'm speaking from the heart. And so, I'll say what I feel. And probably my biggest frustration, not really the price. I mean, the price performance of Pulse really hasn't been that bad. I mean, truly, like it's still frankly overvalued. It's really hasn't been that bad. Like a 66% markdown from launch price, like that's actually fine, for what it is. But the thing that's kind of been more disappointing to me is that there's not like a strong culture of innovation. The culture is mainly around the copies. I mean, it's kind of, there's a fork of Ethereum. PulseX was a fork of PancakeSwap. The world's largest airdrop was just copies of all the tokens. The only thing that drove demand was a copy of a stablecoin. So it's got, there's not like a culture of like breakthrough innovation. There's some things kind of here and there, but that's just not kind of really present there. And so that's, in a world where like basically all different chains are interchangeable, I think it really comes down to some of those like fundamental values that are promoted by the network. And to me, like, a culture of innovation is really, really important. And fostering that innovation for other builders. It's like I take a lot of pride in innovative solutions that I might create, but I also feel like I'm kind of underutilized in that sense. Like I want to be able to support other people who are maybe subject matter experts who need help getting a product to market, which I've done for years now across numerous industries. hundreds of millions of dollars of business has been conducted, and products that we've built and launched. And so just really making myself available as a resource to help foster this culture of innovation and support support people who are building. That's really big. I don't feel like there's really that kind of culture of builder support on Pulse Chain, and so that's instead of complaining about it, I'll kind of show what I mean, and that's kind of really so that part is highly important to me. Next up, it's powered by HEX. So the way it works is that on Flexnet, the native gas token is actually a unit called Flex. Flex is simply wrapped HEX. It's a Flex is a contract that actually lives on Ethereum, where you can always mint and redeem Flex one-to-one with HEX. And the HEX just sits there. It doesn't get staked. It doesn't get moved anywhere. Like, it's fully backed, always redeemable, fully trustless, no fees, nothing. And the only reason for that is that, like, if you look at Ethereum has 18 decimals. And since on this network, the Flex is basically like replacing Ethereum, the token has to have 18 decimals, and HEX only has 8. So really, that's the only only nuance there, is that Flex basically just pads the end of the value with 10 zeros. And that's just to make HEX compatible with the network as its native gas token. So not only is it the native gas token, but it's also the primary liquidity pair. So Flexnet launches with a new type of token standard, which includes a DEX and a launchpad built into the token contract itself, with some interesting features that I'll describe soon. But HEX is the primary liquidity pair. Flex is the primary liquidity pair in assets issued on FlexDEX. And since Flex is just simply HEX, this is kind of a whole economy built around HEX, where HEX is that primary trading pair. Whereas, like, on Ethereum, most of the coins are traded against ETH. On Solana, most of the coins are traded against Sol. And on Pulse Chain, most of the coins are in liquidity pools with PLS. So HEX is kind of, that in this setting. It's built on Conduit, so leveraging this rollup stack for world-class infrastructure that the network can utilize. And so why HEX? So this is important. This was actually, I thought through a number of other coins to actually make this one, but it all kind of came back to HEX. So number one is widespread distribution. It's like HEX has been around since 2019. And it has value independent of Flexnet. Because launching a new chain, it's always, that has some inherent risk baked in. And so adding another token that you also have to drive value to, that's a challenge as well. And so to limit the number of challenges that must be overcome, using a token that has independent value of Flexnet is actually, what I think is the right decision. And since HEX has such a large user base, there's 100,000 plus people that can get on Flexnet instantly. So that's really important. And also the high growth potential of HEX. HEX has proven resilience. It's drastically undervalued. And there have recently, over the past couple of months, been a series of bullish catalysts, such as the reduction in HEX inflation. And I think that HEX really is primed for explosive growth. I could go on and on about all the different factors. If you want to read my analysis, just read through my tweets over the last couple of days of, like, really why HEX on Ethereum is the one to focus on. But it really boils down to HEX of all coins in the ecosystem, really is the one with the highest growth potential, in my opinion. And so that's why Flexnet is centered around HEX. And then FlexDEX liquidity, because HEX has such high growth potential, bonding assets to it as part of kind of the core token issuance and trading system. I think that can just amplify the gains in both ways. So if there's demand for tokens on it, that demand kind of gets routed through HEX, but also independent of Flexnet, increasing value of HEX increases the value of the FlexDEX tokens. And there's also, I'll talk about that when we talk about Flexnet or FlexDex. Okay. So what makes Flexnet unique? So first, FlexDex. This is a novel ERC20 token standard that I've created over the last couple of months. Where built into the token contract, it has supply issuance, it has loss mitigation features that help you know exactly what your max possible loss is, which is really important. And it has liquidity pools all natively built into the token contract. So here, why don't we click into this and then we'll read more about this. So native liquidity pools, a price floor mechanism, integrated limit orders, no token approval required, which is actually like an awesome user experience improvement, and fair launch distribution. So I've explained this before, but I'll explain it again, kind of how this works. So when you launch a token on FlexDex, every coin on there just has a standard 100 million units, just for ease of comparison. Really, it's an arbitrary number. It could be anything, but just less things for a user to kind of mentally calculate. So standard 100 million supply, and it opens up with a 24 to 48 hour period where anybody can deposit Flex and then capture their portion of that initial 80% of the total supply. So this does two things. One, it solves snipers, because usually if a coin is just launched on a pool, the first big buyer just dominates the liquidity pool. And then every new buyer is basically just giving money straight to them. So that can kind of ruin a token from the start. And so this type of fair launch distribution mechanism actually helps to prevent snipers from just kind of ruining coins that would otherwise be awesome. And what it does, it also bootstraps liquidity. And so after that period, after that period of the launch distribution, then the remaining 20 million units of the supply and then 25% of the Flex deposits go into a standard constant product liquidity pool that lives inside the token contract itself. So 20% of the supply plus 25% of those deposits actually sit in that contract. And it's just in a liquidity pair. So you can buy and sell directly from the contract itself. And then once that happens, the remaining 75% of the deposits actually go into something it's called the price floor. But what that is basically a limit order that the contract has. It's a trustless limit order that the funds just sit there and anyone can exercise this, where the contract is equipped to purchase back all of the issued supply at a set discount. And so it kind of creates a dynamic where there's like a price floor where you know that like your max loss is that price floor, instead of like in normal tokens, like look at the Gophers chart, like for instance, this price floor mechanism, honestly, this came about from thinking, because like obviously, Gophers sucked, like it was a dumpster fire, just like, kind of how that all played out. And so this is something that I wish would have been implemented in that. And so that's kind of where this idea came from, like real experience launching things, seeing how these mechanics work out. And then, kind of all that really led to this mechanism of a price floor where, funds that are used to issue an asset are used not just to buy up the price. Cause like, how we've seen, I've lived it personally. I know Richard's lived it personally. If you're basically just buying up, if you're just buying up the asset, it's not really organic demand. The market sniffs that out quickly, and then people just trade against you. And then it's just kind of a waste of funds. And you're pushing the price up, which is giving organic buyers a worse deal than what they would otherwise get. So overall, like mechanisms that take inbound funds and then use that to market buy, I actually don't think that's a good idea. I used to think that was a good idea, but that's really not a good idea. And so this is kind of the opposite of that, where inbound funds that are used in the issuance of the asset are instead put as basically a big limit buy order. It's kind of like a buyer of last resort. And so what that does is it, I guess we'll talk about that down here. So, one, it you know your max possible loss. So, which I think can be really bullish for these coins, because with every normal coin you're buying, like your max possible loss is that it all goes to zero. But with this, it's like that your max possible loss is probably around 25 to 30%. So that's like a big breakthrough, I think. So it's kind of like a safety net, which I think can be bullish to the upside. And two, kind of fair unwinding. Like what we've seen, it's like there's literally millions of tokens launched every month, and not every coin has permanent success. Like that's kind of one of the use cases of these. It's kind of like a fantasy football style weekly speculation where you're trying to find what thing is going to run that week, and then everyone cycles out and on to the next thing. And so these price floors actually kind of create a situation where, rather than a handful of people who are the first to exit capture most of that value, it actually allows more people to capture value in a coin that's just kind of run its course and then people are ready to move on. Because like that's kind of the reality of it now, is that the the like coins are so ephemeral. Like it's very rare for a coin to last longer than a couple of weeks now, especially in the kind of high risk meme coin space. And so assets should have a way to kind of unwind, and so this is a big solution to that. And then also it creates this type of strategic risk-free trade where, say, price is kind of winding down, people are kind of over the narrative. It's like meme coins are funny until they're not funny anymore. And so say something's kind of not funny anymore, the world's moving on. And so you see a coin on Flexnet and it's near the price floor. You can buy that. Say the price floor is 1% below the current price. You could buy the coin and basically do like a community takeover, buy the coin right above the price floor. Now your max loss is 1%, but your max upside is infinite because all the liquidity actually still sits there. So, and say the price floor has been kind of, burnt out, like say, it's able to buy back all of the issued supply, but then there's still a little bit of supply that's actually in the liquidity pool, that like can't reach the price floor because it's in the liquidity pool. And so like, even if price floor has been exercised, like there's still coins available to run it back. So like coins may kind of have this like revival where like maybe they're at the price floor or like near the price floor, kind of the first cohort of people, they're done with it. But then a new group of people can kind of step in and run it back on some of these assets. So the original name for this concept was actually called Bounce. I have the domain bounce.fun, and it was kind of meant to kind of describe that mechanism of like the price floor, like things could kind of bounce from that price floor. But that I think is a really interesting dynamic where, kind of just creates new opportunities where, instead of like, shitcoin just bleeding out forever, the shitcoin will just kind of bleed to the price floor. It'll just be flat at the price floor. Everyone's kind of done. They move on to the next thing, but then like a new group of people kind of just run it back, and then it's, kind of has renewed life. So, so that's kind of the premise there, which I think is pretty. I mean, honestly, like this is probably like this on its own could be great. Aside from the L2 powered by HEX, I mean, just this concept I know is excellent. And so yeah, this is going to be kind of like the PulseX. What is PulseX to PulseChain? FlexDex to FlexNet is kind of how it is. So some of the features. So because the liquidity pool lives inside the contract, you can buy and sell directly to the contract. So no third-party DEX contracts. It's just right there. And so what that does, it actually creates a situation where you don't have to do that annoying token approval step. Like, how you have to basically approve the transaction before you run the trade. In this setting, you actually don't have to do the approval, whether you're buying or selling, because when you're buying the coin, you're coming in with Flex. Flex is the native token. And so instead of doing the approval step, when you have a smart contract that uses the native token, it's done through a function that's marked as payable. And so there's no approval step for a native token. So for buying, there's no approval. Or if you're selling, usually if you're selling, like say you're selling HEX, you have to first approve the DEX contract or the aggregator contract to be able to transfer X amount of your HEX on your behalf, and then you place your trade. Whereas on this, because you are calling the token contract itself, there's actually no approval. So no approval. That its own, I think, is a big breakthrough as well. It's just that's like a really annoying part of ERC20 tokens. It doesn't exist on Solana, and so the no approval part, I think, is really awesome. And then integrated limit orders. So kind of to supplement the normal V2 style symmetrical liquidity pool, you can have limit buy and sell orders natively in the contract. So I think that's good for both liquidity providers and traders, because you can just place a limit order, and it has protection. Like if you try to place a limit order that's below the market price, it like won't let you. It'll just say it'll revert an error that says just swap, basically. So so this is this is FlexDex. So that's kind of a core part of FlexNet. It's just, in like kind of in the spirit of a culture of innovation, we're not just launching with like a, pancake swap fork like PulseX. Like we're actually pushing things forward with fair launch distribution, loss mitigation techniques, and native liquidity pools to solve user experience problems. So that's kind of really like we're doing things right. We're really innovating here. So what else makes FlexNet unique? This incubator. So we want you to be able to leverage our 8 years of experience building and launching applications. So things like smart contract development, front-end development, security audits, launch support, growth strategy, all the things that, Golke and myself have really, like we've really grinded our teeth over, like basically since we were like 22, we've been doing this. And so like we've really built up a lot of experience building, on the cutting edge of various industries. And we really want to make ourselves a resource for developers in this. So there's kind of a couple different ways that we plan to do this. One, kind of a self-serve option. So by now I've compiled pretty big resource of various tools and resources that I use when I'm building products. And so just kind of packaging those up and making those available for people. Things like boilerplate smart contracts, starter dApp templates, developer tools, knowledge base, and just make myself available like through kind of office hour type of things. So that's kind of like a self-serve resource. So just really good developer resources for people who want to build on FlexNet. But then this like elevated option here where like there's kind of more deeper integration, where like I might be doing real engineering work on whatever your product is. Golke may be doing real front end engineering and design, like so really deeper integration. So where we'll have some type of deal and agreement with this, and so that's kind of for larger projects, and we actually have an application thing here for you if you have and we've got a couple good applications so far. So that's kind of what that's about. And large as it gets, it's like ultimately, there may be some type of venture fund element to this too. Like I think this really can be a big competitive advantage for FlexNet, is this incubator system. Okay. So what else makes FlexNet unique? The vibrant HEX community, that kind of goes without saying. HEX has been pioneering innovation. The HEX community has been at the forefront of DeFi since 2019. Launched in 2019, was a category creator for yield generating assets in the DeFi space. It was one of the first major use cases of Uniswap, helping to popularize decentralized exchanges. It was one of the top performing assets of the 2021 market cycle, and a massive community was formed around delayed gratification and long-term value creation. Like that is key. That is like that alone is why you should be bullish on a blockchain based on HEX. It's also kind of there's some strong community values that Hexicans really speak and they act on. So long-term vision, I mean, max length stake 15 years, everyone's got one. Community engagement, so much content creation, meetups, ecosystem projects. So like there's a really strong bond. Even people that kind of hate each other still kind of come around HEX. Big educational focus where people really like to educate others about blockchain and game theory and all that. And global reach. I mean, there's people all over the world who are involved with HEX. And so there's a real synergy there where Flexnet can create unique value by tapping into the HEX ecosystem. One, for the immediate network effect. It's like there's 100,000 people who can access the chain immediately. Long-term alignment of interests, because it's kind of that delayed gratification aspect. This technical understanding too, like HEX users are already multi-chain users with Pulse Chain. So these users are very well versed in multi-chain aspect. There's kind of subsets of the community like Tangang who are, they have things going on Sonic base. Like, so there's already pockets of the HEX world that are highly multi-chain. And then, the value aspect of it where it's like, we don't need to drive value to the gas token. It's like HEX on its own has value. And so that makes it a really good gas token. So what else? There's an ownership opportunity here. So this is pretty big. So actually, let's come back to this because that'll be kind of how we conclude and lead on to other stuff. So these things like the high performance aspect of it, you can read about this. Like, the L2 rollup infrastructure is actually really effective and highly reliable too. So you can go ahead. I don't need to kind of rattle off all this stuff, but it's really high speed, high reliability, low cost, highly interoperable. There's a whole suite of tools and infrastructure to just plug into as a kind of a standard L2. And actually a lot of innovation is happening. Like most of the Ethereum innovation is happening in this space, for better or for worse, that's kind of the reality. And so, you kind of got to lean into reality here. And so the way you'll get onto Flexnet, simple. You first just need HEX on Ethereum. You'll connect to the bridge. When you go through the bridge, it'll convert your HEX into Flex and then bridge that over to your wallet. Then you just connect the Flexnet RPC URL and then you're ready to go. So here, this is the ownership opportunity we're talking about. So to do this right, like there's got to be a budget. Like that's really the difference. But like, the smart contract, you can bootstrap, all as well. But the blockchain space, like it's a very competitive space. It's like Solana has raised hundreds of millions of dollars and they deploy it. And that's why Solana is so great. Base is a company, has Coinbase behind it, cash cow from the exchange. And then, that has helped them fund the development and like all the supporting things like business development, developer relationships, all these things to help make Base, really good. Sonic, they raised a lot of money and deploy it. Pulse Chain raised a lot of money, but that's kind of something else that's kind of been the a shortfalling is that a lot of money was raised, but not a lot of money was deployed. And so, with this, like the kind of the way to build up that budget for actually executing on this is creating opportunities for people to become basically owners in the system. And so there are these things called ownership units, which you can get currently $50 per unit today. Once the testnet launches, probably next week, it'll ratchet up to $100 per unit. And then once mainnet launches, it'll be $200 per unit. And so if you're a network owner, there's 4 unique revenue streams that will, go to the holders of these ownership units. So first is the sequencer fee. So that's equivalent to like the validator fees. To put it in perspective, Coinbase earned $120 million from operating Base 2 as the sequencer. So, big growth in network activity equals big revenue from sequencer fees. FlexDex LP fees. So this one I think is actually probably the biggest revenue potential in the short term because just the way this is structured. So when on FlexDex, when that initial liquidity pool is locked, it's locked, but then the fee actually accumulates towards the ownership. So it's like as if the Flexnet owners have permanent liquidity positions in all the tokens, but they're able to collect the standard liquidity fee that comes from that. So, if you provided liquidity before, that those fees come in both tokens. You're earning some of both of the asset, and so Flexnet owners actually have exposure to all the assets that are on FlexDex. So on one side you get Flex, which is just HEX, and then on the other side you get the other token, and that token is actually backed by it's backed by the price floor. So there's actually a minimum or a max downside that could happen. But if some of these coins run, you're earning it, and as a fee. So it's actually a good way to, I think is probably the biggest value proposition in terms of a revenue perspective for acquiring these ownership units is the FlexDex LP fees, because in a way it gives you some exposure to all of the coins that launch on it, where there's kind of like a baseline amount that you would earn. But then ones that run, like they could really run, and then you get to capture that instead of trying to trade and capture all those on your own. This kind of gives you exposure to that. And then also, ownership units, like kind of if there's like equity deals related to incubator projects or like revenue sharing, that's like another source. That one's, probably, less likely, but the outcomes could be large. And that's, probably the smallest ongoing, but maybe periodically there's like big windfall kind of revenue sources from that. But then also these fundraising bonuses. So each round you get in, so once you're an owner, you actually get a bonus from when the next round of funding, is complete. So if you join in this angel round, there's a bonus that gets paid to everyone who holds ownership units as of the angel round once the seed round is complete. And that's one, because these ownership units, as part of an effort to just fully align the network owners with like the success of the network, these ownership units are actually they're non-transferable NFTs. So these are they'll convert into a liquid token at some point in the future, but as is, they're non-transferable, and that's I'll go into why in a second. But because they're non-transferable, I still want people who participate in this to be able to capture some value from the increasing price of these ownership units. And so as the price goes up, and then new people are buying these ownership units, some percent that'll be announced soon is just going to be carved off and distributed to those holders. It's kind of like a dividend. Kind of another way you can think about it would be like, if the price is doubling, it's like dollar cost averaging out on each double, but you're not actually DCAing out because you still have your ownership units. You're just getting you're just kind of taking some cash off the table as new funds come in through that. So that's to align the owners with future fundraising efforts, because the fundraising is really important. Like to make this a big success, like the more funding, the better, basically. And so to align owners with that, then they'll get a bonus every time there's a successful funding round. And so these FlexDex Flexnet ownership units, you're a co-owner of the Flexnet ecosystem, multiple revenue streams, advantage for being early, and you get exposure to ecosystem growth. And so these are the four things that I just kind of highlighted: sequencer fees, FlexDex LP fees, incubator equity, and fundraising round. And then this is how you purchase them. Currently 0.0369 ETH per unit. That was $50 a couple of days ago, but now it's about $60. So that's what you do. So these are non-transferable NFTs on Ethereum initially. They will convert to a liquid token once certain network benchmarks are met and substantial value has accrued to them. The revenue distributions are paid in HEX, they're paid in Flex, paid in ETH, a variety of tokens. Some of those will be kind of automated Others will be a little bit more discretionary. And then the total supply of those units is going to be 100,000 units. So currently 10,000 are available, only about 9,000 are left, about 1,000 have been purchased so far. And then that is the ownership units. Let's talk about the roadmap so far. So I've actually this has actually been a work in progress for now a couple months. Had this idea about a year ago. So kind of did some early research into the topic before. Got some kind of core work done on it, hashed it out, aligned with some, initial partners to get it done. And then that's kind of where we're at now, is where we started the ownership unit sales kind of in this angel round. So the bridge integrations started, and the testnet is actually almost like I could deploy the testnet right now. I'm going to let this kind of marinate a little bit more, to give more people a chance to lock in and learn about it and not be in a rush. A lot of people DM me like, "Oh, I get paid this week. Like, please wait." So we'll let it kind of marinate, let the narrative marinate a little bit, and then testnet will probably be next week. I mean, if there's not a rush, may extend it just to get more people. I want more people. I want people to get like who are in this and who know me and follow me. I want them to get a good deal. But we do want to, keep the ball moving, keep momentum up. So we'll launch the testnet, and that's when the rate will go up. And then, so with that, like with the testnet, like that's when like the full bridge integration will be tested. That's when the Flex contract will be tested and audited. And that's when Flex decks will be deployed on testnet. So there'll be probably a couple weeks of testnet stuff going on. And then once everything is clear and we've got all the partnership integrations and all the infrastructure ready, then we'll go forward with the mainnet launch. And then that's kind of when we'll be kicking off the efforts with the incubator, expanding partnerships, and really trying to support developers who are going to get involved. So yeah, I mean, that's kind of where we're at, is that, so far about 937 of these has been purchased. Buy them right here on the site. The rate will double, and that kind of, it's like right now it's basically an idea. And so the price should be lower. And these are capped as well. That's another important point, is that something that I think has kind of been detrimental to Pulse Chain success is that the sacrifice wasn't capped and it created supply. Every new dollar that went into the sacrifice created new units of Pulse, and it wasn't capped. And so all of the demand was absorbed. And the majority of that demand was in HEX, which demand was absorbed. Paper value of the HEX was granted, and it didn't introduce any liquidity into the system. Whereas, and then, $650 million of other coins was absorbed. That did introduce liquidity to the system, but that actually hasn't been, actually put onto the chain or invested in the network. So like the whole premise of the sacrifice, I think, really has been detrimental. And so that's kind of what we're aiming to solve here, is that, like as is with these 3 funding rounds, if you add them up, the amount available times the price per round, it only comes out to like $3.5 million. Like in the grand scheme of things, it's really not much. And so, and that's really to just align this with the success. You don't want this to be oversubscribed, because then it'd be harder and harder to be able to, recurve out like that amount of value through these revenue sources. And I mean, really, the whole structure of this is really about alignment. It's like, it's not a liquid coin, because that's also something that I've that we've everyone's seen. Everyone's aware of these things. Like, I'm not saying anything new here. Like, because Pulse itself and PulseX were so oversubscribed, it actually puts them at odds with everything else being launched on the network. So, so that is like there's like a native disalignment with, Pulse and PulseX with everything else on the network. Like they're like, and I think Richard views everything else as competition. That's why there's really not support for developers on the chain, compared to like other networks where there's like high support for developers. So I think that is a big, thing that I think a better structure of kind of like who owns the chain, who benefits from its success. Just doing things so that it aligns perfectly with that. So yeah, so that's kind of how all this was designed. Those are my thoughts on everything. And so I'm going to go through the chat and answer the questions. First thing, what is this crap? We have pulse chain. Yeah, dude, stay on pulse chain by all means. Hola, the catcher of dips. Doing 10 plus dips while listening to catcher. I mean, if you guys seen RH Max in person, this guy's like 6'6" and jacked. I think he does 10 dips for every dip catcher says on a live stream. That's why he's so ripped. Oh, nice. Finding the idea of how to burn hexes there. So from the beginning, why create pulse and not just take hex to the gas chain finally? Yeah, I mean, really, this is what pulse chain probably should have been. But you know, hindsight's 2020, of course. NJ Dub says, this is interesting. Thanks for continuing to build. Thank you. So Flex is the native gas token as a wrapped hex token? Exactly, yeah. The native gas token, it could be any ERC20 token. The only caveat is it has to be one with 18 decimals. Hex has 8 decimals. Because if you remember, Hex was actually a Bitcoin clone. And so Bitcoin has 8 decimals behind the 0. And so 8 zeros behind the decimal. And so Hex does. And so I was actually, believe it or not, the original kind of concept here, I was going to do it with Calm so that the narrative could be something like free gas for Hex stakers. But Calm has 12 decimals. And so I would have had to do wrapped Calm. And if I'm going to do wrapped anything, it might as well just be wrapped Hex. Is it also possible to insert not only hex, but the perfs like maxi, deci, lucky, trio, base? So that's actually not a bad idea. Really, it's not. Kind of the only issue there is that it introduces complexity around redemption. Because in order to keep it like actually pegged 1-to-1, like it always has to be 1-to-1. And so introducing other ones may, you know, like it would create a situation where maybe like, you know, some people put in hex, some people put in perpetual tokens, but then when you go to redeem, like there's no hex left, but then you put in hex, but you get back max, even though that's not a big deal, you know, like, because it's backed by more than that. It just kind of introduces like some inconsistency there. The perpetuals will have a different role where more so as like staking Flex is really just acquiring pre-staked tokens bridged in. So, and that's kind of where Pool Party comes into play as well, with like kind of like more accessibility around stake pooling. The like when you're staking your Flex, it's really going to be buying discounted T-shares in pre-staked hex through the pool tokens. So those will have a different role, not for the gas token, but for you know, that other stuff. Archie says, good evening. We'll need to rewind after. Go for his launch on Flexnet. That could be a good one to kind of run it back with that brand and do it on FlexDex with the price floor mechanism. It's a good idea. So the color scheme is black and green, like the Matrix, kind of cool. There'll also be a focus on privacy. Yeah, so there is a lot of privacy infrastructure related to L2 stuff. And, you know, implementing things that are kind of like Tornado Cash or some of the other privacy solutions, and or even getting in on like trying to get integration with things like Block Blend. That's, you know, like another privacy solution. So yeah, that's a good idea. Black and green, that's right. Because you insert a mechanism where you can only put hex in, which has been created this year, so people are forced to create new stakes. Creating, I mean, it really needs to be as simple as possible and like less barriers to entry as possible. So, you know, I want all hex to be able to simple bridge so that more users can get involved. Relaunch of Gophers on Flexnet. Could do it. Absolutely could. Should the Gophers guys get some ownership units thrown into the mix as an incentive for losing on Degen Chain, for example? I mean, that was like, Degen Chain, that peak degeneracy. Like, we were throwing out all stops to try to deliver high gain, and that comes with a lot of risk. And sometimes, things just don't work out. Like if you lever up the risk to try to lever up the potential gain, it's kind of what happens. I mean, 10K on like that's a big position for a high risk speculation thing. Like if you have, that definitely sucks. So the reason why is getting into a thing about like ownership units for people that didn't, aren't consuming this. So, and this kind of goes into this as well. If all ownership units don't sell, others be burned. No, they just won't exist yet. And then ownership units, the only way they come into existence is if they're issued in one of these funding rounds, or they can just be allocated as a compensation for some work. So like, you can either get them in these rounds, or if you make some outstanding contribution to the network, or if like, you provide some service, or like say you're an exchange and you decide to list Flex, but maybe part of the deal is that they want some of these ownership units. That's kind of there's a lot of discretion there for, kind of how to use those. So, there may be people that did that. I've kind of shied away from trying to lump past people into new things because, I've done it before, like that's probably been the biggest problem with the party launch, was that there was actually like giving airdrops to everyone who'd ever done anything that I had launched in the past. That was basically, honestly, that was kind of dead on arrival. Like, because like obviously I have the list of all the addresses who got that, and seeing who like the max sellers were, it's just kind of, it's not an aligned incentive, because like, that like for instance this one, like Gophers on Degen, like, it really does suck that you experience loss trading a high risk meme coin on a high risk chain. But that trade didn't introduce any liquidity or value into this system. And so, like, there's just kind of not that direct alignment there. But, I do want, to do people right. So maybe there is some type of thing that can happen. And maybe over time we'll get more liberal with kind of how these ownership units get, kind of distributed. And so, I'm not going to commit to anything now, but maybe there is some way to kind of, airdrop some of these units to people based on prior activity. But the reason why I've kind of shied away from that is that I've personally seen how that basically just does nothing. And so that's why that's not part of it from the start. But you never know. It could be. I'm very open. Like, I'm very open to being persuaded otherwise. Like if you have like, if people come with good ideas and frame it in a way that really persuades me, like I'm very, very open to persuasion. So just came in, jumping over the fence and throwing a few punts anyway. There we go. I'll watch it tomorrow though. Yeah. Hey, dip catcher. IMW integration. Yeah, so KG actually seems very open to this. So yeah, hoping to get integrated fully. And I would even, and I need to reply to his tweet about it. I have it in a draft. Even further integration beyond just, like adding it as one of the chains supported natively, but I think it would be awesome to have like a tightly integrated FlexDex integration, where you can like buy and sell directly in the wallet via FlexDex. And so yeah, and I know that they must do significant indexing and kind of, so I want to see kind of what things that they're already like what kind of data aggregation they're already doing in terms of like portfolio values, event indexing. Because if we can lean into that and they're willing to do some integration, like things like that are good examples of like how ownership units can be used as like part of like compensation for integrations. So that's a good example. And KG's a good guy, so I know that'd be good. Jeremy says, I trust you 100%. You're the most honest and well-intended dude in all the RH ecosystem of influencers. That's why I kind of went balls to the wall on DGen. Yeah, I mean, I lost more than anyone else did because I know how much everyone put in, and I lost more. So it sucks, but we keep pushing forward. Like, this is what innovation means, and you're right about the no risk, no reward in this economy. Like, yeah, it's like we're really pushing the envelope here. If you want low risk, like there's plenty of things for low risk. But I do really appreciate what you say about honesty and good intentions. I do take pride in that. JB says, nice. Yeah. Flexnet, FlexDex, big time. Let's see what people on Twitter have said. So here, let's dive. Here, I'll read some tweets of mine that I put out in the last couple of days, and we'll talk about why HEX. And maybe we'll look at some charts as well. So let me scroll back, and I've been tweeting so much. Let me find the tweets. Scroll. Okay, so I mean, I'm just gonna read some tweets that I have about HEX and why the number one amplifier of value on Pulse Chain is an increasing value of HEX on Ethereum. There's $82 million on the bridge, and 15 million of that is in HEX. So $1 million of demand on HEX increases the bridge value of Pulse Chain by more than $1 million. It's easier to drive $1 million of increased value of bridged HEX than drive $1 million of fresh stablecoin demand to Pulse. So that's a big piece of it, is that like I want the whole ecosystem to succeed. There's a lot of headwinds in the way of that. And so you need the high leverage thing. And the high leverage thing is HEX. I prefer HEX on Ethereum because there's not so much dead weight to carry. It actually had real price discovery at all times, including exaggerated downside when the market decided. All the late mover top buyer energy from 2021, which would have been resistance on the HEX chart, was sacrificed at 100x too high valuation and became resistance on Pulse and Pulse X. Double whammy on those while relieving downside pressure on HEX. So that's important. Like that's like a honestly, like why HEX will break out of its 50-cent all-time high, because everyone who bought there sacrificed for Pulse Chain and Pulse X. So there's not like that market memory. Like that market memory has moved over. So let's see. Let's read other tweets about this. Flexnet is the first blockchain designed to support HEX. I code in 4 weeks what you code in a month. We are not the same. Okay, this is important one here. The hard truth about why I'm trying to find alternative path to success in our ecosystem is that the economics of the Pulse and PulseX sacrifice will take years or decades to resolve, if they ever get resolved. Number one, honoring the paper value of HEX, which was then burnt for the sacrifice at a flat rate of 0.0001, created too much supply at too high of a cost basis without injecting liquidity. Only HEX benefits from this. The sacrifices were way oversubscribed at too high a valuation. This creates a massive wall of resistance at 0.0001 with no corresponding support. $650 million of cash demand was extracted from the system through the sacrifice, and now is worth under $300 million. This is 75% less than the current $1.2 billion paper value of Pulse, PulseX, and Inc. This is 90% less than the paper value at sacrifice price. There simply is not enough to go around to deliver gains for everyone. The only way to get gains is to be part of a small number of people who get in at low prices, not to be one of 140,000 people who got in at high prices. This is why I'm not relying on RH to inject much into the markets. It is basically giving it away to the first sellers. He's done it before on a number of occasions, and it produced the same result, so he has certainly learned his lesson. Of course, people who are relying on Pulse and PulseX for their first big win in crypto don't want to hear this. But I earnestly believe that the best path to success is centered around HEX on Ethereum, and I am proving my belief in that with my actions. Pulse Chain had a chance to be excellent, but it has two massively heavy belly lumps hanging out from under the t-shirt, which aren't getting any smaller due to hugely funded and organized competition. Pulse Chain, the network, is a fine network. It is just too heavily reliant on PLS, the token, and receives the negative benefit of being tightly coupled with PLSX. We must free ourselves of these negative externalities we have put upon ourselves and restore HEX to its true glory. So that really is why, of all things to focus on, HEX is the one, and not HEX on Pulse Chain. I'm talking HEX on Ethereum, not the forked copy of HEX on a new network. HEX on Ethereum, because the sacrifice for Pulse and PulseX introduced a lot of headwinds, and the only thing that benefits from that is HEX on Ethereum. The gas fees for ending stake on HEX on Ethereum, that's mainly should be solved at the application layer. That is solved with pooled HEX stakes. And what's kind of interesting is that, and right here, FFGB NNNB says, funny how right after you told Axis inflation is the problem in HEX, they always started doing massive stakes. Yeah, and then they start tweeting about how they need to cut inflation. Yeah, so kind of what's interesting is that reducing the inflation, there's a concept called minimum viable stake, which I think I first published about in like 2020. And that's like kind of what the minimum viable stake is, if you with all costs considered. And so this actually drastically increased the minimum viable stake. But HEX gas, like gas fees really aren't the problem. Demand dilution is the problem to solve. And so, and especially now that the, even though like I've been calling for rate slashing monetary policy in HEX for years. It's a massive problem. It's getting worse every single day. But luckily the OA listened, even though they blocked me on Twitter, even though Richard blocked me on Twitter. I think the message got through somehow. It's kind of a no-brainer. Very few people agreed with it, but it was clearly a problem. So now, HEX rates are much lower. I think today I calculated the starting APY of a max length HEX stake based on the current daily payout per T-share and the current share rate comes out to about 4.1% annually. And that, of course, grows every year because as your stake matures, other stakes expire and the total supply increases. So like the total payouts increase. So that's like what the starting rate is, but that's actually like the perfect timing for something like Flexnet because, and it's similar in like the kind of the real economy. Like the reason why there were these like basically like from 2012 to 2021, it was like all on raging bull market across all markets was because the baseline Fed fund rate was so low. And so you get basically nothing if you just like lock up in treasuries. And so that pushed people to take on more risk, fund more stuff, speculate in the markets. And then when the rates go up, then that kind of recedes. And that's kind of a phenomenon that we're seeing in HEX is that, with artificially high APY, which is really just paper APY, it's not realized APY. It could be hard to get, such high, for a 1 year stake, it was something like 9% APY. That's just way too high. So it's kind of hard to deliver 9% annually on HEX. But now that it's much lower, so it's now close to like 1% annualized for a 1 year stake, you get like that will push more and more innovation in HEX to try to allow people to drive returns on their HEX. And that's really what Flexnet represents. It's like you can deposit Flex onto the network, which is just one-to-one with HEX. And then ideally there's opportunities on Flexnet where you can earn more than what you would earn staking. So overall, that's honestly the smartest thing that Richard's done in the last 5 years has been slashing rates in HEX, because that really unleashes like a new wave of innovation, new use cases, new source of demand for HEX, and cuts the inflation problem, which it was bad to start and got worse every day. And it was actually amplified. The thing that made it so bad was actually a side effect of the big payday rules, believe it or not. So yeah. Any HEX tools vibing with your plan? Any reset up with HEX YouTube influencers so we'll deliver working out 2 this bull cycle? Yeah, working out 2 will be like, it could literally be tomorrow, but we'll let things marinate with a proper test net. Yeah, that working out 2 will be here in the bull cycle. When would it make sense for A to ES to artificially push the daily payout back to higher prices? No, I don't think ever. All that does is just like create a big wave of inflation, and I don't think that they're going to do that. Maybe they might like just do one just to give like a single day of big payouts, but yeah, I don't think so. All right, you guys. Let me see on Twitter if I have any more questions. If anyone else has any questions in the chat, let me know. I'm going to get off in maybe 5 minutes from now. Wow, 971 people viewed. I think that Twitter, yeah, so 16 people currently watching on YouTube, 956 on Twitter, but I think it artificially it like keeps it like is a running tally. I don't think it counts it when they close out the window, sadly. Let's see if I can look on Twitter directly and Liquid Degen says clown shit. It's kind of funny. I mean, I knew that there'd be opposition. One, like there's ever since I the audacity to launch a token on Solana, there's like kind of this whole wave of just generally low performing, low IQ user that was just like really offended by that. People who outsource their thinking to Richard Hart, basically. So there's a handful of people who are like really upset about this. Like, of course they are. But the really smart people that I talk to in the space, like they full alignment. Like I cannot tell you how many times I've been told that this is what Pulse Chain should have been. I mean, someone even in the comments above in the chat suggested that as well. So there's more comments up here. Flex is the middleware tied directly to ETH. Pulse chain's too heavy. 5 different coins for fighting for money. Yeah, it's a big problem. Hard to solve. What'll be the Jue be called on Flex? Hearts? No, it's not going to be called hearts. Maybe farts. People hate on Gophers Will Soul make me laugh. Yeah, people are so fixated on that. But yeah, I mean, kind of expected that. And I think, over time, people will more come around to the idea. And, of course, there's always going to be people that are just salty, crabs in a bucket mentality, which, it's like there's people who are really all about the culture of stagnation. Like the people that suggest that things are good. Sorry with that. Yeah, it's pretty funny. Some people are I think just stuck in their ways, and they're not they've never done anything innovative, never been a part of anything innovative, and they're just too committed to old narratives, basically. And I think really what it is that a lot of people want the narrative that they were sold on to be true. And whereas I'm willing to like refresh narratives and try new things. 1,000 hex sacrifice for pulse chain is now worth. Says, why don't my comments show up on your side? I see, hey, dip catcher. I see, hey. And then, I don't know. I mean, are you getting censored? See if I can. Transaction fee similar to base? Yeah, probably. Yeah, I feel I'm getting censored somehow. If you have a question here, maybe just like reply to the tweet instead, and then it'll show up here and I'll just read it. So it just deletes comments sometime. An idea? I got an idea for a token to only go up. Yeah, sure. So the way I would approach that, negative rebase. And so I shit you not, I have like, if you look at my private GitHub, there's like probably like 6 or 7 like completely new types of token launch mechanisms or just like speculation formats. One of which is a token that has, and maybe this is something. Maybe we can collaborate on this, and or maybe someone just build this, or maybe this becomes like on Flexnet.tech, you can like choose this as like a type of token to launch. Instead of a coin where you stake to earn more of it, it's actually backwards, where you stake it to remove yourself from the negative rebase. So rebase is when like the whole supply and everyone's balance just like scales either positively or negatively. So positive rebase is like where say you have 100 units, then there's a positive rebase of 10%. Now you have 1,100 units. Or if there's a negative rebase of 10%, suddenly, like without even any transaction, like just the way that the contract works, you suddenly have 900 units. So kind of this idea for a token would just like on the price chart go up. Doesn't necessarily mean your value goes up, but where you time lock your token, which burns it, and then that escapes you from the negative rebase. So liquid holders of the token experience negative rebase. So every day, like their balance just kind of dwindles a little bit, including the liquidity pool. So like as the liquidity pool's balance kind of dwindles a little bit, then the price is just kind of naturally rising. Like if no one did anything, the price, because the liquidity pool is not staked, so like the liquidity pool's balance itself is dwindling, the price just kind of naturally goes up. But like you as a liquid holder, like your amount is dwindling equivalently, so like your value stays constant, but the price kind of goes up. But if you staked your coins, you escape that negative rebase, and then so it's kind of like rather than staking and earning inflation, you are staking to hide from deflation. It's kind of that premise. Quantum rebase, yeah, that's maybe that's a way to kind of hash that. Like that'd be cool if like it was. Let's ask ChatGPT what a quantum rebase would be. Okay, so you are a Galaxy Brain smart contract blockchain engineer and optical physicist. You are tasked to create a smart contract mechanism that implements a quantum rebase. First, describe what that quantum rebase would be, and then provide solidity snippets of an implementation. No need for a full contract. Quantum rebase would be a novel approach to token supply adjustments that incorporates quantum computing principles into blockchain technology. Here's what this mechanism could entail. Quantum rebase mechanism would operate on quantum-inspired principles applied to traditional blockchain systems. Superposition-based supply adjustment. Unlike traditional rebases that have deterministic outcomes, a quantum rebase exists in a state of superposition until observed or executed. The final supply adjustment could be probabilistic rather than predetermined. Good idea. Entanglement between parameters. Economic indicators such as price, volume, market cap would be entangled with supply adjustments, creating complex interdependencies that better mirror real economic systems. It's a good idea. Quantum random number generation, utilizing quantum randomness via Oracle via unpredictable but bounded supply adjustments to mitigate manipulation. It's a good idea. Wave function collapse. When conditions trigger rebase, the wave function collapses into a specific adjustment state based on probabilistic outcomes. Wow, and it gives some solidity snippets. This quantum rebase implementation creates a unique mechanism that leverages probabilistic outcomes and entangled economic states to create a more organic and manipulation-resistant token supply adjustment mechanism. The actual implementation would further require refinement and security considerations, especially around the quantum randomness source and economic parameter feeds. There you have it, quantum rebase. What if you have unidirectional swaps where you can only go in one direction for stables in USD20, and the way you sell is through an OTC P2P smart contract where its price updates constantly to reflect the price of unidirectional swaps? It's called unidirectional case. The way you have a token that only goes up and can sell directly to other people, no middleman. So yeah, I mean, I guess you could do that. Sometimes they call those honeypot scams. And it's something that like Dex Screener warns against contracts that have that, where you can buy but not sell. So, if you got around that, that'd be good. And then, so I guess you could sell only if there was someone there willing to buy OTC. So maybe to do that, you would need to maybe make it where the OTC is at some like discount to the market price. Cause like, why would you buy OTC if you could buy on the market at the same rate? So you probably need a discount there. And so in that case, like that's like effectively price going down a little bit. But yeah, I mean, try building it. Good work. It's a cool idea. All right, you guys, it's time. Gonna hop off. Go to Flexnet.tech to learn more. Acquire ownership units if you want to participate in the success of Flexnet. Oh wow, since I refreshed, 12 of these have been purchased. That's exciting. And yeah, have a good day, everybody. We'll talk to you soon. Goodbye.